I was just going to ask you, how does this impact the REIT marketplace, or the real estate marketplace, I should say, in general?
Well, in 2014, S&P Dow Jones Indices and MSCI, as they do from time to time, issued a market consultation. And through that market consultation, they asked the investment community, should we create a new headline sector classification for real estate and take real estate companies that are currently in the financial sector and move them to their own distinct headline sector, therefore creating and adding to those 10 sectors a new 11th sector. And the overwhelming response from the market was yes. And when S&P and Dow Jones and MSCI in their press releases since that decision have repeatedly noted two reasons for making the change. One was the feedback from the market consultation, through which investors basically said real estate should be viewed as a different type of investment from banks, insurance companies, and other finance companies. It should be on its own. Coming back to the discussion we had about asset class. The other reason was that listed real estate companies, mostly REITs, have grown to such a size, as I said, a market cap of around $1 trillion over the last 20 years, that it warrants its own sector. So those are the two reasons driving it, and the result is that REITs and other real estate companies will no longer be hidden in the broad financials sector. It will be removed and elevated to its own headline sector. And we believe that this is a very significant development.
So greater transparency, and it's grown to such an extent that it really warrants its own classification. That classification brings about greater transparency and actually ultimately helps the marketplace.
Yes, it's greater transparency, it's more visibility for REIT-based real estate investment, for real estate as an asset class. It makes it more accountable to the public, to investors, so that they can actually look at the mutual funds that they invest in, the indexed funds that they invest in, the ETFs that they invest in, and they will now be able to see, are those various funds overweight real estate or underweight real estate? Before this change, you could never see that.
So as we talked, our firm is focused on defined contribution retirement programs. And I wanted to drill down. So what are the implications in terms of GICs to U.S. retirement programs, specifically DC plans? Is it just more due diligence? Is it more understanding?
I think it has potentially a number of effects. One has to do with how portfolio managers actually allocate their assets. If you go, for example, to the websites of the major investment companies, Fidelity, T. Rowe Price, Charles Schwab, Vanguard, iShares, and you go to the landing pages for any of their funds, their actively managed funds, their indexed funds, or any of their ETFs, someplace on those landing pages, you will either find a tab or a listing of the actual stock holdings that they have in the fund. Right? That's part of their disclosure. This is what we actually own. Yep. All right? And if you navigate on those landing pages, someplace you're going to find a breakout summary of all of those holdings as classified in the 10 headline sectors of GICs. You will see that. When you look at that, you won't see real estate. So you have no idea, unless you download all the individual holdings and go through all that analysis yourself, what the actual allocation is to real estate. Because of this change, that will likewise all change. All of those landing pages will be revised. All of the fact sheets that you can download will be changed. All of the marketing materials will be changed. And so real estate as part of that fund or ETF will now be visible. And you will be able to see, is the fund overweight real estate or underweight real estate? If it's underweight real estate, what's the reason for the underweight? Maybe it's a good reason, and you as an investor agree with that. Maybe it's not such a good reason. And that helps you sort of navigate to the appropriate funds that meet with your objectives, including retirement savings.